Ladies and gentlemen, welcome back to the channel. Let's give you guys this scoop in the intraday update on what is going on with AMC, what is going on with APE, because AMC down about 8.5%, APE up over 5% on the day, and the numbers here, they don't lie. AMC's cost to borrow rate's well over 100%, as per Interactive Brokers. Cost to borrow max, well over 300%. So let's get into what is happening, why APE is up, why AMC is down, what that could ultimately mean, guys. So first things first. Keep in mind, I'm not a financial advisor. Come to your own conclusions. I am not a financial planner, none of that good jazz. But this information is public information, so let's talk about it. So as far as these stocks, APE currently up about 5.29%. AMC currently down about 8.86%. So not a terrible day for these stocks if you have both of them in your portfolio, right? They're kind of hedging each other out. And that's exactly what hedge funds are doing. If you take a look at AMC, you have 0 shares available to be lent out, like literally 0. Cost to borrow rates for Interactive Brokers sitting at about 105%. Cost to borrow average 226%. Cost to borrow max 358%. Cost to borrow minimum at 7.26%, 19.26% short interest of free float, and the live short interest, aka the amount of shares currently sold short, sitting at almost 100 million. Now, exactly what is going on with AMC is hedge funds are obviously trying to short as many stocks as possible or shares as possible. They're just trying to get their hands on shares. That is why the cost to borrow rates are going so high. Now, if we take a look at APE, different story here. Over 10 million shares that are available to be lent out. That's why these cost to borrow rates are cheaper or lower, right? 13.32%, cost to borrow max at 17.37%, 7.5% short interest of free float, and the live short interest sitting at about $38.64 million. So based off of these numbers alone, it's easy to see what is going on. Hedge funds, they're shorting the crap out of AMC, but they're going out and they are buying APE. It's kind of like the reverse strategy of AMC so far, right? Whereas APE has been underperforming, AMC has been overperforming. Now the roles are reversed. And what ultimately will come from this is either APE comes up higher to AMC and then eventually AMC matches up to APE, which would make a lot of sense, or you get APE that comes up a little bit and you get AMC that falls a little bit. So it's hard to put an actual dollar amount on where these two could go. It looks like APE might have a little bit more upside over the short term than AMC does, and that is just because this hedging strategy that these hedge funds are doing. They're going out and shorting AMC and they're going out and buying APE. The numbers are here to show that that is exactly what is happening. Like, it is no secret as of today, and that's why you've seen APE make some pretty big moves, and AMC has made some pretty big moves to the downside. Now, if we take a look at the option activity for the day, this is also something that is not helping AMC whatsoever. 6 orders totaling $763.29 thousand, positive order value of 7%. So again, when you see positive order value this bad, you're probably not going to get a green day in the stock. It's going to be very hard to get that green day in the stock. And hedge funds, they do not want to see that green day. Even if you get good numbers coming out from Avatar 2 like we did see this weekend, they just don't want to see that, right? Because they have a lot of short positions on the stock. They have a lot of manipulation schemes that they are currently doing, and that's why they're doing this hedging strategy to try to push down AMC in a way that will not blow up their positioning. And as we do know, there's not a lot of risk for the market as far as earnings or as far as economic data for this week. So it's a pretty good time to do this hedging strategy, right? It's not like you're going to get a huge beat to the CPI report that's going to come out this week, or retail sales that are going to be good, or GDP that potentially could be good, or anything else that could be good. You don't have that risk that you wake up and AMC is going to be 15 to 20% higher off zero news, right? Or zero like company specific news, though, just economic data. So that's what they're doing. They're going out and doing this strategy. Now, a way that you can offset this, I don't like to buy puts on AMC, especially At $4, it just doesn't make sense. There's not enough money to be made, in my personal opinion. A stock can go up to infinity, but it can only go to zero, and the stock is only at $4. So I do think buying AMC at the 52-week low has always been a profitable bet ever since the first short squeeze. Back in January of 2021, it's always been a good idea to buy AMC at the 52-week low, and I don't think that has changed, or I don't think it will change over the next couple of weeks, next couple of months, as we head into 2023. So, like we just went over, not that much economic data. You have initial jobless claims on Thursday. That's going to probably be the biggest data point, and that's probably not going to be important at all. You don't have earnings. You have 3 companies that report earnings that analysts follow, and none of those are important to the markets. None of them will even make a secondary headline on CNBC. So you don't have either of those 2 factors. You actually did get good numbers coming out from Avatar 2 over the weekend. That did nothing for the stock. So we really got to see how positioning ends and really continues throughout this week, because, one, it is going to be a short week. And then 2023 is really going to be interesting, especially the first couple of weeks, because everyone is calling for this downside move in the markets. But if we get that downside move here, over the next week, maybe it's not going to be so big in the beginning of 2023. Because if we take a look at the NASDAQ down about 1.10%, the Dow is up 0.25%. Big discrepancy here. But what you're also seeing is the VIX is up 4.5%, which the VIX has been stubbornly low for really all of 2022 as the markets have been falling. The VIX really has not been playing along. And VIX measures the put to call ratio on the S&P 500. So when the VIX goes up, that means there's a lot of puts going on to the S&P. When the VIX goes down, there's not as many puts going on to the S&P, right? Or maybe just more calls, right? So there is a big discrepancy between the NASDAQ and the Dow, and that certainly not a good sign heading into 2023. But what is a good sign is that bond yields are going higher today. Yes, I said it. In this market environment, 2022 bond yields going higher has not been a bullish thing. But as of right now, if bond yields are rising, that means bond investors are not fearing a recession. The last thing you want to see is bond yields falling and the stock market falling. That's kind of what we've seen for a couple days about 2 weeks ago. Those really red days that we've seen in the markets, the bonds were also falling. The bond yields were also falling. So that means investors were going out and buying bonds. Why do investors buy bonds? Because they're fearful about economic growth and they want some safety in their portfolio. So believe it or not, seeing the bond yields actually going higher is a positive thing. You don't want to see bonds going lower and the stock market going lower at the same time, guys. So there is all of that information. That's probably the most positive thing that we're seeing for the day, which is quite adverse, because typically in 2022, bond yields going higher has been a negative thing for the markets, but not when there is fears of a recession, guys. So there is all of that information. If we take a look at the Stocko tracker data for this intraday update, I'll go ahead and let this refresh a bit. All right, so for this Friday, 6,500 calls that are in the money, 73,000 calls that are out of the money. For in the money puts, that's sitting at about 34,000. Out of the money puts at about 28,000. So the numbers still looking very healthy here between the calls to puts. And if we do take a look at the actual numbers over here on Ortex, the open interest for the call side, 56.28%. Open interest for the put side at 43.72%. So not quite as good as what we seen last week with about 75% calls, 25% puts. But still, more calls held in open interest for this Friday than puts. I would say that is a positive thing, even if we're seeing this short-term pressure from hedge funds trying to lend out any share they can. Like, they are trying to lend out and short sell any stock they can get their hands on in AMC. That's why you're seeing the cost to borrow rate spiking like crazy, and that's why you're seeing that there is 0 shares available to be traded. And really what this means by the end of the week, it's going to make it very, very volatile. I will say you're at a 52-week low right now. Like I said, if you bought AMC at the 52-week low since January of 2021, you have been rewarded very nicely for that, and the stock has bottomed, it looked like, or looks like, for the day, hopefully at $4 even. That is the low that we did hit, even though we are still pretty close to that low right now. $4 is probably going to be a huge psychological support level at that. So there you have it. I am looking for a bounce, like I said in the last video, the price prediction video, you know, as high as 638, this 50-day moving average, but I really want to see that break just above $5.05. That would be a hugely positive thing right now. And if we take a look at volume on the day so far, sitting at about 15 million, so it's a very low volume day as well. If we take a look at APE, AMC keeps falling, APE keeps rising. We just got a lot of bullish indicators. You guys can see all of these green dots. These are all bullish indicators, and now APE is up almost 7%, going from 65 cents just back here on December 19th. Now hit a high today at $2.05. So a very interesting move that we are seeing. You're also seeing a lot more volume in APE, about 66 million so far on the day, and it might be a good strategy, you know, to buy some APE right now, especially as it has fallen so much. You could get a short squeeze in APE and not see that in AMC at the same time. You know, you might see that adverse reaction where APE is up a lot, AMC is down a lot, and if you can spot that now, you might be able to make some money off of that, because there's obviously something going on. Someone is buying APE, and I don't really think it's a lot of retail investors. I think it's a lot of hedge funds, guys. So there is that information. That is what is going on for the day. Hopefully this did clarify a lot to you guys. Hopefully you understand what is going on with AMC. Hopefully you're not just discouraged at this point, like, why is AMC going down and APE is going up? You got to understand, hedge funds shorting AMC, buying APE, it's a hedging strategy, but it's also making AMC look a lot more bullish at the same time. Cost of borrow rates to 300%. Interactive Brokers says there's 0 shares available. There's a lot of demand to get their hands on shares of AMC, guys. So that is it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.